Hello traders, so welcome back. Today what we're going to be talking about is going over our last week's analysis, talking a little bit about our trading model and explain how it works. Now we've been getting a lot of questions and so forth, so I just felt like it was the right thing to do this, and we do this mainly every week, just showing you the predictions that were made in terms of the levels and the final outcome, because we really believe in transparency and we want to make sure a lot of people see it for themselves here. Okay, so the STX model is a option premium pricing model that is designed to pretty much help you and assist you determine which direction you should work. Now, these levels are very carefully calculated at the beginning of the week, and this is what I pretty much want to showcase. So for everyone that wants to learn how it works, this is the best video to watch, because not only are these levels and inflection points that entirely pretty much help you figure out what decision you should do in each scenario, but it also helps you understand what strikes to pick, where's the bullish and bearish breakdown ranges, which is the chopper ranges, and this is key information you need, especially if you're trading options. So in this STX model room here, it pretty much explains what the definition behind each level means. So I'm going to be explaining this from basically telling you from a perspective, because like when it comes to trading options, there's two sides of the coin here. It's a zero-sum game here between the people that buy calls and puts. So that's like people like us, we buy calls and we buy puts. Our max risk is the amount of money that we initially front. So if you buy a contract for $5, your max loss is $500, but your max gain is infinite depending on how far along deep in the money that you get. The other side of the coin is basically the people who sell the premiums. Now this is basically people writing the contracts. They have a guaranteed rate of return depending on the amount of money they write the contract for. Their losses, on the other hand, could be infinite, okay? Because if a person writes a call that costs $5 and the value of that contract exceeds that, goes deep in the money, then their losses could be infinite based on how much the value of the option is worth as it gets closer to maturity. So what this model pretty much does is figure out where is the demand for an option premium writer to start writing premiums, where is the demand for a option premium seller to start selling, where is the demand for a call buyer or put buyer to sell or buy options. And that's what we pretty much analyze with this model here. So each level that you guys see right over here, level 1 represents a gatekeeping level. So this is where basically the premium seller sees that the premium is potentially a high demand to write a call option, right? So for example, if you see a stock like NVDA at the beginning of the week hit our level 1 bearish, right? This was a strong area to write put premiums, because the put premiums are relatively high when it gets to this 106. So what this causes is usually a spike up. Now, if the stock has news or anything like that that's negative, most likely you see this level break. It acts as a gatekeeping range, and it also depends on what moment in the week it happens. If it happens during the beginning of the week, that's when the premiums are most expensive, and that's where a lot of option premium sellers tend to write contracts there. So if you believe that the overall sentiment is positive and the stock goes here, then buying calls here is going to be a great idea. Okay, so that's kind of important to note here. Level 2 pretty much confirms the trend. So this is where basically it becomes very easy. So what happens at this point here is, so let's just say if a market maker has these options that they wrote, let's just say they wrote 120 NVIDIA calls, okay? When it hits this level 2 bullish, for example, this is where the market maker starts to freak out, because their outstanding contracts are losing money. So what they tend to do here is that if they have, let's just say for example, a million outstanding option contracts, what they will do is that they will tend to offload half of it, so their outstanding is now 500. This will cause a temporary drop in the stock for a moment, and what happens here is that the market maker ends up buying they stock in order to confirm, and this is what really confirms the trend. The only thing that can negate this effect is usually if, let's just say, if there's news that counters the trend. So anytime we see a stock or index hit level 2, bullish or bearish, we know exactly that, okay, this is where we want to play this. We're going to wait for a little bit of pullback on the premium, and we're going to jump in again at that specific point. Level 3 pretty much confirms our bottom, and that is a reversal area. So if it's level 3 bearish, buying calls at that particular moment is key. And that's where we usually see things like around the NASDAQ and around the S&P 500 as well. So let's go into these key levels and let's discuss it in great detail. So in our market sentiment report for our first stock, we pretty much gave the details with NASDAQ. You see our estimated weekly high, estimated weekly low. This is purely based off not the premiums, but the gamma levels, right? So this is totally different. The inflection points is based off the premiums that expire at the end of the week, and this is pretty much based off the gamma levels. So the gamma levels for NASDAQ was as low as the 1967, and that's where pretty much we closed around at. So you can see the level of accuracy there, and this of course is all timestamped, no edits done whatsoever. So our level 3 bearish was around 19,235, and just please note this is estimates. So even though we were off by a couple of points here, it's still pretty much accurate. You can see right over here, it touched here, and then it pretty much dumped temporarily during that time here, okay? So you can see how accurate it is at these points, and this area also held as well. So you can see that was the correct bottom. For our SPX, pretty much our 55.32 was the bottom. You can see here many times it held at 55.32, and if you bought calls there, it would have definitely worked. As you can see, the market kind of held between the level 1 and the level 2 bearish zones here. The market stayed below that estimated weekly low, and we did break to 5,500 at one point, but it quickly held and recovered here. So not the perfect bottom here, but you know, early on in the week we did call the bottom very perfectly. Once again, these are just estimates, but it gives a good idea to our traders on when you can consider buying calls or puts as well. And you see, guys, right over here, when the level 2 bearish hits, that's when you know that the trend to the downside was confirmed. So throughout the entirety of the week, the trend to the downside was there, and pretty much when you hit the level 3 bearish, that's when you will likely see reversals and so forth. So buying calls usually around these areas is what definitely works here. Now let's go straight into all our other charts that we have and go line by line. So with SPY today, we pretty much very similar to SPX. You know, we're very close to calling the bottom here, so I'll give this a W in terms of overall prediction. For QQQ, we call out an amazing play on the downside to here as well. Very close to calling the bottom here. It was 466, so we were off by $1 on the bottom here. You guys can see right here, 465. So this was a good estimate on our absolute bottom on level 3 bearish that held. For NVIDIA as well, we basically see that we called out the perfect 106 number as our key level 1 bearish, which I mentioned the definition on. That pretty much held throughout the time. We actually did have calls on this on Monday after it pretty much stopped and held that, and then it really pretty much closed up, but didn't hit our estimated weekly high. We spoke about the upcoming event that is happening. You can see that right over here. That's what we see from our levels. 106.54 was a strong one. Tesla. So Tesla here, pretty much we call a perfect bottom here, okay, at 218.1, and you can see right off that wick right there, that was a perfect estimate. The level 3 bearish was the absolute bottom, and it went as high as back to level 1 bearish, which is where it stopped here, okay. You can see time stamped. We talked about all the details behind it, and that's the chart that you guys see here. So far we call the perfect details on Tesla, NDX, SPY, and so forth. Okay, so the next one is Meta. Now Meta over here, we knew that the estimated weekly low 590, very strong area of support. You can see right over here, that's where tons of buyers always tend to come, and that could have been used as a key area to buy calls. Didn't hit our level 3 bearish as well, which was 5770. You can see right here, timestamp non-edited, right? Our estimated weekly low 590. SMCI. So let's see. So for SMCI, this stock actually stopped at our level 2 bullish here. So it was in our chop range and hit our level 2 bullish, which was at 43.67. Rejected there, but this confirmed the upside trend here. So every dump was going to get definitely bought out, and it's pretty much stopped at this 200-day moving average right there and then. So that's another good crowd. So if we look at crowd over here, you see that it pretty much hit its level 2 bearish and recovered here. This one I would say that it was a little off, and because level 2 bearish usually would mean that you would see a backward downside trend, and it stopped at level 1 bearish. It went down a little bit, but it recovered near the end when the markets got this strong. But there was kind of news on that front where, you know, X got hacked. So I think once that had happened around here, like you were starting to see more hacking going on. A lot of stuff was happening. I think that's what counteracted this whole situation with the level 2 and caused a lot of strength in the stock, because it was literally outperforming other stocks on Tuesday when the whole market was weak here. So MSTR was another stock I believe we called a bottom on. So this one here, 230 was our absolute bottom on the week here. A lot of our members actually loaded up on this stock for at the estimated weekly low, and they just nailed it here because it hit the estimated weekly low and then it literally stopped at our level 1 bullish right there, 298, and that was a perfect close on this. So this was definitely a A+ moment for this stock here. Coin, we see right over here that it level 3 was right close to the bottom, just right over there, and this stock was another perfect analysis that we see. You know, our level 3 bearish was right over there at 176, and we called the bottom on that perfectly. ARM, when we look at ARM over here, we see that we called a perfect bottom at estimated weekly low, so another W here. You can see that right here that it literally stopped at our estimated weekly low on ARM at 110. So you can see that right over here. That's a perfect buying opportunity for calls. Snow, when you look at Snow, it hit our level 2 bearish, pretty much stopped right over there at 146. So, you know, the trend to the downside was confirmed, but when the market was strong, that's where it pretty much bottomed. And you can see that right there. UPST, I believe I called the bottom on this too. So UPST, we called the exact bottom at around 45. So you can see that right over there. Another perfect analysis on this stock right over here. 45 was our estimated weekly low, and that's exactly where we bounced off of. Broadcom here hit our level 2 bearish. So if we go here, right? So these are pretty much similar levels as last week. You can see right over here that level 2, level 1 bearish was pretty much the bottom. It's kind of choppy here, but that was interesting. App 11, so App 11 did stop at our level 2 bearish here, and the downside trend did not get confirmed here. Okay, so I think once the market got strong and things recovered, that's pretty much a stop. But it did work well on our inflection points. It did hit our level 1 bullish and then drop, but pretty much was choppy and then got strong once the market started to move. GS, so this is other bank stock. So when we look at GS here, we call the bottom on this stock very perfectly at around our estimated weekly low is at 520. You can see that right there, and then 520 was our bottom, and that's exactly where it stopped here as well. So very interesting to see. JP Morgan here. So first time we were looking at this stock, a part of our thing. We also called the bottom on this at 225, and that was a perfect entry point there. Netflix, so I think Netflix we got wrong because it went, yeah, so it was slightly off on the Netflix here, but it pretty much bounced as level 1 and then recovered, so we'll take an L on that. But you know, it did bounce around our numbers, but not to the point where I would consider that a win here. RGTI, so pretty much bounced around our estimated weekly low at 7.5, another perfect entry point on that. So very, very nice chart here that we called on RGTI. It stopped around that 7.5 multiple times, and then it pretty much just flew here. And the next one here is ASML. So ASML over here, as you guys can see, I'll probably take an L on this one. This one was wrong, but pretty much it went below our estimated weekly low, our level 3 bearish as well, and then managed to recover. So very very volatile with that. Hood, we were relatively right on this one here. 38 will seem like it was a level 3 bearish at 36. Seemed like it was a very strong support. Only a few instances it went below, but it pretty much held. So I still think that's a pretty good review on that. PLTR, if we're looking back at PLTR over here, it was slightly off from its level 3 bearish support, which was at 74. It did really break down in our bearish breakdown range that you guys see over here, but you know, pretty much ended up closing in our chop and neutral range that you guys see over here. So that one's pretty decent as well. BABA, so if we look at BABA, I don't remember looking at this chart though. Okay, so BABA over here stopped at around our level 2 bearish here, did break down here and pretty much popped. Okay, didn't really go down to as much. And Visa, I think I got a good call on this as well too. Yeah, so popped around a level 3 bearish over there. As you guys can see, it was moving between our level 2, our estimated weekly low, which is at 330, and our bottom is around 330 over here. Okay, so that's the entire analysis, guys. And for next week, we're going to be dropping more ideas, more analysis as well. So when you guys have this level of information, it allows you to pretty much find the right strike, figure out where you can pinpoint your entry for calls and puts, where the market's going to be choppy and so forth. And having this great level of detail will definitely make your trading scenario a lot better. So thanks for tuning in, guys. See you guys in the next one. And like always, let's get that money.